Hey, Jim Zaspel here. Before you buy a property and get a mortgage, I don't care if it's a house to live in or a rental property to invest in, watch this video because it could make you plenty of money. All right, so what am I talking about? I'm talking about interest rates, and as we know, this is September of 2023 right now. Yes, I had to look at the calendar, but this is September 23, and we've been experiencing about 16 months, maybe 15 months of just increase after increase in terms of interest rates. And it's made penciling out a rental property a lot more difficult, right? So, but one thing you want to consider is is it worthwhile to buy the rate down? So when you're going to get a mortgage, again, whether it's for your primary residence or a rental property, you always want to ask your loan officer, say, listen, what options do you have for buying down the rate? What does that mean? What's it mean, a rate buy down? Maybe you've heard that term before and you weren't sure what it meant. What it simply means is it's a fee. It's a one-time fee you pay the lender at closing in exchange for a lower interest rate. So, for example, let's just go through here. I'm going to walk through a 30-year mortgage, 7% interest versus 7.5% interest loan. What does that look like in terms of monthly payment, and is it worthwhile to pay a 1, 2, or 3% interest rate, or 1 or 2 or 3 point rate buy down? So at a 7% interest rate, 30-year fix on a $200,000 mortgage, your monthly payment for principal and interest is going to be $1,330.60. Right, so it's an annual payment of $15,967. If you just go up if you go up a half a percentage point, so 50 basis points to 7.5%, your monthly payment goes from $1,330 to $1,398. That's an extra $68 a month, plus a little bit of pennies, right? $68 a month extra, right? So your annual payment is $813 higher at $16,781. So again, 7%, your monthly payment is $1,330. 7.5%, your monthly payment is $1,398. Again, multiplied times 12 months, that's an extra $813 per year you're going to pay at that just a 0.5% interest higher, going from 7 to 7.5% interest. So the question is it worth it to you to buy down the rate, to pay a fee? Is it worth $1,000, $2,000, $3,000? Who knows? I'm going to walk you through the exact formula I use to make this determination. It's a simple cut and dry determination. All right, so here it is. So a lot of times you'll see like a 1%, 2% rate buy down, maybe 3 points. So ask your lender in this case, hey, how much, you say you get quoted at 7.5% interest for mortgage. Say, hey, how much would it cost me to go from 7.5 to a 7% interest mortgage? And they'll say, well, that's going to cost you 2 points. On a $200,000 mortgage, that's $4,000. So is that worth it or not? So here's the simple math formula. You take the monthly payment savings over the course of the year, so the annual payment savings, in this case is $813, divide it by the rate buy down fee, in this case $4,000, so $813 divided by 4,000, what's that equation come to? It comes to about 20.3%. In other words, you're getting a 20.3% cash on cash return by paying $4,000 to get a rate buy down to 7% from 7.5. All right, so again, it's really simple. If I lost you in math, here's the simple formula. Add up your annual payment for principal and interest only and subtract the difference between one to the other. So higher rate versus lower rate. In this case, I'm saving $813 per year. Divide that number, the annual savings, $813, divide that by the amount of dollars the lender's telling you have to pay to get down to that lower rate. And then that'll leave you with the cash on cash return. So it's 2 points. If in this case it was 3 points. Let's say the lender says, hey, it's $6,000, a 3-point origination fee, just to get your rate down from 7.5% to 7%. So you'll take your $813.96 divided by $6,000. What does that do to your cash on cash return? Puts it at 13.57%. Is that worth it? Would you invest $6,000 if you knew that every year for the next 30 years you're going to get a 13.5% cash on cash return? I don't know. Maybe you would, maybe you wouldn't. That's your decision to make. Hopefully this helps the rate buy down decision making process easier for you. Have a great day.